Good morning, ladies and gentlemen, and welcome to the Q1 FY23 earnings conference call of Torrent Power Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mashruwala, Vice President Finance. Thank you, and over to you, sir.
Yeah, thank you. Good morning to all of you. Thank you for joining earnings call of Torrent Power for Q1 FY23. First, I will take the performance of the quarter, after which phone lines will be open for Q&A session. We'll explain the performance of the company at PBT level first, and then thereafter tax expenses will be taken separately. Reported PBT for the quarter before exceptional items stood at 671 crores as compared to 273 crores in corresponding quarter last year. This is an increase of 398 crores, about 146% on a reported basis. To understand the underlying performance of the company, we'll take you to the non-recurring item first. First, non-recurring item in the current quarter, which includes two items. First, profit of 16 crores on account of sale of land parcel. Second, non-recurring item is the provision of 10 crores of performance bank guarantee issued by the GUVNL as a security for development of 100 megawatt solar power project. Provision is considering due to elevated solar module prices in range of 26 to 27 cents compared to much lower levels assumed at the time of bidding. Generally, projects are not viable at current level. All put together, net non-recurring credit was 6 crores in Q1 of FY23. Now, moving to the non-recurring item of Q1 of last year, which is provision for doubtful debts at franchise distribution business of 21 crores due to substitute recovery on account of second wave of COVID. So there was only one non-recurring item in the comparable quarter of last year. Adjusted for about one-off items, PBT for the quarter stood at 665 crores compared to 294 crores in the comparable quarter of last year, which is higher by 371 crores, about 120, which is increased by 126%. Now take you to the key highlights of the improvement in the adjusted PBT by 371 crores for the current quarter. There are four main reasons for increasing this 371 crores PBT for the current quarter. The first reason is improvement in profitability of the gas-based power plant, mainly on account of two factors. First, gain of 89 crores coming from sale of LNG, which as discussed earlier in the call, with elevated LNG prices, it makes commercial sense to sell LNG instead of converting it to electricity. Second, gain of 41 crores on account of lower depreciation charge in DGN on account of one-time increment charges taken in Q4 of FY22 and reduction in depreciation rate in Sujan. In total, profitability of gas-based power plant is improved by 130 crores. So out of 371 crores, first gas-based power project has contributed 130 crores. Moving on to the performance of distribution business, due to restoration of industrial and commercial demand, which has impacted largely due to COVID-19 pandemic, there was a marked improvement in overall contribution from the distribution business by 133 crores. There are a couple of reasons for this increase in contribution by 133 crores. First reason is gain on account of reduction in P&L losses of 38 crores. This is mainly in franchise distribution business. Second, volume and rate gain from the franchise distribution business by 41 crores. Higher ROE as well as incentive in license distribution business by 33 crores. And we got some solar incentive of 21 crores in license distribution business. All four put together is contributed 133 crores from the distribution business, both franchise as well as license distribution business. The third reason is renewable business of the company saw increase in PBT mainly on account of two counts. First, on account of PLF or in solar and wind, which has increased in the current quarter, then which has given additional profit of 33 crores. Second, on account of acquisition consummated during Q4 as well as current quarter, which has given additional profit of 30 crores. So all put together, this renewable project has contributed about 63 crores additional profit as compared with in the current quarter as compared with the comparable quarter of last year. And we also made profit of 16 crores in the cable business due to increase in volumes. So all four reasons, basically from gas-based power project, distribution license as well as franchisee, renewable project and cable, all put together has contributed 371 crores of additional profit during the course during current quarter. Moving on to the tax number, considered profit after tax reported for the quarter is 502 crores as compared to PAT of 208 crores in corresponding quarter of last year, which is higher by 294 crores, which is increase of 141%. These were all about the financial performance of the company during the quarter. Now moving on to the operational performance of the company, distribution business witnessed a marked improvement in the overall demand and surpassed the pre-COVID level of Q1 of FY20. Demand during the Q1 2023 has increased by 22% year-on-year basis and by 5% compared to Q1 of FY20, which is a pre-COVID level. The growth was mainly driven by the revival of demand in industrial and commercial segment. This completes the overview of the quarterly and financial as well as operating performance of the company. I now will give you the brief update about the current project which are under pipeline. For 150 megawatt 55 project, which has received extension of FCOD from February 22 to September 22, EPC contract has already been awarded and project is likely to be commissioned during the course of FY23. During the quarter, company has also awarded 300 megawatt wind power project under SECI 12 tender at a tariff of 94 paisa. Acquisition transaction executed with Sky Power Group to acquire 50 megawatt solar power project under Sun Solar Power Private Limited was consummated during Q1 of FY23. That's all for this quarter. Now I request coordinator to open the phone line for Q&A session. I wish everybody to stay safe and healthy. Thank you. Handing over to operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shalini Vasanta from DSP Mutual Fund. Please go ahead.
Hi, this is Vivek Ramakrishnan. My question was on the T&D losses for the quarter.
I'm sorry to interrupt. Sir, we are not able to hear you. Could you please use your handset to ask a question?
Yes, ma'am, I'm using the handset only, but I think there's some problem.
Yes, sir.
Is it better now?
Sir, your audio is breaking actually.
Is it better now?
Yes, please proceed.
Okay, so my question was on the T&D losses for the quarter. They seem to have edged up a little, and could you just tell us how you expect the T&D losses to move, and is there any reason why that has changed? Thank you. That's my only question.
See, T&D losses has improved particularly in the franchise distribution area of Agra, even in SMK, because it was impacted similar quarter of last year because of the COVID second wave. So I can give you the update about what performance we have demonstrated in terms of T&D losses. In terms of T&D losses of Q1, Bhiwandi is about 11.24% compared to 11.56% of the last year. Agra, we have a very good improvement from 17.43% last year to 14.25%. Significant improvement in Agra we have reported. SMK it was 43.20% last year, and we have achieved about 38 close to 38% in the current quarter. So there is a significant improvement in T&D losses particularly in Agra and SMK area.
Okay, sir. And so you expect that the numbers will further improve going forward? I mean, is there any scope for further improvement?
Yeah, we expect further improvement going forward.
Okay, sir. Thank you very much and good luck.
Thank you. A reminder to all the participants to press star and one to ask a question. The next question is from the line of Swati Jhunjhunwala from VT Capital. Please go ahead.
Yes, good morning. Thank you for taking my question. So my first question was also about the T&D losses. So we are seeing that the distribution licensee areas have increased the T&D losses, whereas in the franchisee areas the T&D loss has decreased. So is there any particular reason for that?
The distribution license area is particularly Ahmedabad and Surat, so it's not strictly comparable. One has to look at the overall yearly number. So on a quarterly basis, it's not strictly comparable. So if you look at the Q1 of current year, it is about 9.32% versus 7.7% of Q1, and Surat is about 2.99 versus 2.61% last year. So it has, in license distribution area, has gone up. But year as a whole, if you look at last year, it was Ahmedabad was 4.17. So going forward, it will come down because in the hot summer, generally distribution loss in Ahmedabad and Surat area is a bit higher than the overall average of the yearly average.
Okay, that's helpful.
Sorry,
second question is.
Yeah, go ahead.
Yes. So second question is, in Dholia, when do we expect the operations to start?
We expect the operation to start during the current year. That is what our expectation is, because we are awaiting the demand to come. So we expect the operation will start in the course of current year, particularly H2.
So is it?
H2.
Okay, that's H2. That's nice. Okay. And third is on the Dadra and Nagar Haveli and Daman and Diu. So in this quarter, we had a T&D losses of 2.23%. I wanted to understand how low can we get? Like, what is our target T&D losses for this area?
If you look at the Dadra, Nagar Haveli and Daman and Diu, most of the areas are commercial area is almost more than 90, about 90% kind of a thing. So it's kindly comparable with our Dahej area, where the distribution loss is about 0.5% kind of a thing. So we are not saying that it will go to that level, but there is a further scope of improvement in the T&D losses of Dadra, Nagar Haveli, Daman and Diu. Because it's an industrial base, not a very small percentage of residential customer.
Okay. And one last question. Could you give me the breakup of revenue between the distribution licensee areas and distribution franchisee areas?
We don't have the revenue breakup at this moment. We can give the offline.
Sure. Thank you so much.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities Limited. Please go ahead.
Thank you and good morning, sir, for the opportunity. Great set of numbers yet again. So just a couple of questions, if you can just throw some light on the gas sourcing as to, how much do we have in already booked and, post the recent LNG sale that we are doing. And just to make us understand, in terms of the spreads that we've earned in the recent LNG sale on an average for the quarter. So, yeah, that's those two to begin with. Thank you.
The LNG sales is basically a merchant sale. If you recollect, we have always said that when we have a merchant gas available, it is always, or we have a gas available, it is better to. We see the opportunity available in the market. Currently, we saw the opportunity of selling the gas rather than converting to electricity. So that is why we sold gas and made profit from the sale of LNG. As far as Triad is concerned, it's the same status. As reported last quarter, we have about 50% tie-up of gas for our beneficiary from FY23 calendar year F23 to 26. That is what tie-up is. There is no further. We have contracted one cargo for the merchant power for the merchant gas. Otherwise, we for the current year we yet to have to tie up the gas.
So just to ask on this, we read in some newspaper articles stated that domestic gas supplies to power sector will be curtailed because of the high LNG prices globally. So any view on that? If you heard anything on that front, it's just news.
We are not seeing we are only domestic gas available is a Reliance gas only KG86.
No, I think Rahul Rishi here. That news is basically for the subsidized gas which has been given to power companies. In any ways, our share from that subsidized gas is extremely low, so that it will not make any difference for us.
Okay. Sure, noted. Just some more clarity on, sir, if you can just elaborate on the recent couple of acquisitions that we've done in the renewable space. There have been some very small ones also. So some update on that and your thought process on how do we see, on an annual basis, additions that we are targeting over the next 4 to 5 years in renewables, both organic and inorganic. Thank you.
In recent part, we did 4 acquisitions, particularly renewable. First is the 156 megawatts with CSE, which is a wind asset. Then 50 megawatt with the Lightsource BP, 25 megawatt with Visual, and in the current quarter, 50 megawatts with the Sun Shakti. So Sky Power, which is so 4 acquisitions we did in last quarter as well as current quarter. So as far as future plan is concerned, we evaluate it depends on the opportunities available and what value we have to what reasonable value which is available. So it all depends on the opportunity available. So we don't have any target in mind for making the acquisitions.
Okay, and sir, we had bid for a project at ₹1.99. So are we moving ahead with that, or this 10 crore is for that project that we provided for?
10 crores is for that project only.
Okay, so we are not going ahead with that.
As of now, that is what the plan is.
Okay. Thank you and all the best.
Thank you. The next question is from the line of Ankit Mittal from SBI Mutual Fund. Please go ahead.
Yes, a few questions from my side. So firstly, on the distribution franchise part, just to understand, if you could highlight specifically for Agra and Bhiwandi, how is the demand going? Have we crossed pre-COVID levels in these two circles? And from that perspective, how do you look at the AT&C losses for the full year for these two franchises?
Demand for franchise distribution area has reached across the pre-COVID level. For example, I can give if you look at the demand of Q1, so it is up by about 24% as compared to the comparable quarter of last year. And if you look at the pre-COVID level of demand of FY20, it's up by about 7%. So already we have surpassed the pre-COVID level demand as far as distribution franchise area are concerned.
And in terms of the AT&C loss trajectory, because I remember pre-COVID for Agra and Bhiwandi, we were closer to 12%. How do we look at for FY23 then?
In terms of AT&C loss level, I can use the updated collection efficiency. For Q1, Bhiwandi is almost near to 100%. Agra is about 94, 95%. SMP is also about 97, 98% in about things.
So Aniket, with respect to FY23, we don't give guidance per se for the future, but on a directional side, AT&C loss we will keep on reducing, as we have said earlier also that Ahmedabad and Surat is working at around 5 to 6% of AT&C losses, and our aim is to achieve those levels in all these areas in franchise distribution also. So on a year-on-year basis, there would be an improvement. Because of this COVID, that process got delayed. But now I think we are on track to achieve reduction in AT&C losses.
Fair. The second question was on the renewables front. So at a group level, if I look at, we now have about 1,070 megawatt of renewable assets. And quite a few of this has been acquisition-led. So if I look at this portfolio, on an annual basis, what would be the steady-state revenue and EBITDA for these assets?
On annual basis, we don't have the number at this moment, but we can give last year number, for example, but doesn't give the sense of last year EBITDA for renewable was about EBITDA was reported. So definitely this year it will be much higher than 662 crores EBITDA.
Okay, I was just trying to look at because
the acquisitions added PLF is better in Q1, so
right. No worries, I can take that later. The other question was just to understand on Dadra and Nagar Haveli, what's been the profit contribution for the quarter?
So we have started in 1st of April, so it will take some time to stabilize and it will take some time to stabilize. So yes, we can generate a profit in the course of Q1, but that is not significant, I would say, as compared with the overall size of the business. So we are hoping that going forward we will improve the efficiency, we will bring down the O&M cost also. So it's too early to comment on Dadra and Nagar Haveli considering the 1 quarter performance.
Okay. And just last question, just on the fuel sourcing part. So there are two parts to it. One is if you could highlight, what is the amount of gas that we are getting now domestically, and at what price are we getting that? And secondly, for the one cargo that you've contracted, what is the price for that contract?
See, gas, as you know, we are getting gas from two sources. First is we are getting gas from IOC and Reliance KG District. These are the existing sources which is about making about 25% of requirement. Then the cargo which we have contracted is for our merchant requirement. We have contracted about $21. We have contracted.
As far as pricing is concerned, both of them are linked to dated Brent. So there is no fixed price for this domestic gas which are buying from IOC and Reliance.
Okay, but we are getting the 25% requirement from IOC and Reliance?
Yeah.
Yes, we are getting.
Okay, fair. I'll join back in the queue for further questions. Thank you.
Thank you. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah. Good morning, sir, and thanks for the opportunity. I could not hear the entire call, so maybe I'm repeating something. But what was the one-off in the quarter in terms of gas sales you had booked in the quarter?
I'm sorry to interrupt, Mr. Kumar. We are unable to hear you properly.
Am I audible now? Hello?
Your voice is breaking. I mean, the words are not proper.
Yeah, I think, okay, that's okay.
Now I'll try.
Yeah, Mohit, we can go ahead. So basically, profit from sale of gas during the quarter was around 89 crores.
Okay, understood, sir. And so given that the fuel and power purchase costs are very high in the quarter, what is the receivables sitting in our books right now?
So I think on a quarter-on-quarter, it would be difficult or it would not be right to look at receivables on a quarter-on-quarter basis. For the full year, we expect there would be some increase in the regulatory assets for license distribution business. But on a quarter-on-quarter basis, we may not look at regulatory assets or the receivables, because typically all those receivables would get liquidated in next 2 to 3 quarters.
Understood. Given the high price, you don't think you can pass it immediately, you'll pass it over the next 12 to 18 months. Is that assumption correct?
So timeline is difficult to ascertain, but it would not happen immediately.
Understood.
It will be over a period of time. It will be over a period of time.
Understood, sir. Lastly, sir, on the renewables piece, can you just confirm the portfolio number? It's 1.8 gigawatt, right? Out of 1.8 gigawatt, 1 gigawatt is under operation and 0.8 gigawatt is under development. Is that right, sir, the number?
Yes, roughly yes.
Sir, on the 300 megawatt of wind power, which you announced on the bourses that is going to cost 2,600 crore, right? That number seems to be pretty high, more than 8 crore per megawatt. What is the PLF you are expecting from this wind power plant?
40% PLF we are assuming.
40%. Okay, understood, sir. Thank you, sir, and all the best. Thank you.
Thank you. The next question is from the line of Harsh Dole from IIFL Securities Limited. Please go ahead.
Thank you, Rishi bhai, Saurabh bhai. I had 3 questions. One is, if you were to look at the treasury income, we understand that there is a one-off component, but even adjusted for that one-off component, the treasury income seems to be fairly high. If you could just help us understand what is the reason for that. That's number 1. Number 2, in terms of CapEx, with respect to our annualized target, where are we? Or considering the revival in power demand, any thoughts of reviving it upwards or downwards?
So as far as treasury income is concerned, there was a one-off of around 16 crores which is clubbed in other income. Apart from that, if you look at the power purchase cost, major portion of the power purchase in this quarter was taken from merchant power or on a bilateral basis. Now, typically in those contracts, if you pay within 7 days, you can avail discounts on the power purchase cost, which is now getting reflected in the other income. So, and that's why that number is elevated compared to the corresponding quarter last year.
We have availed the discount and we got discount on power purchase for making early payment.
So does this mean that this is passed through in a power purchase cost and our PBT is unaffected?
So it will be passed on to. It will not have a P&L impact. It will be passed on.
Okay. So instead of showing it in the power purchase cost, it is appearing in the treasury income. That's how it is.
Yes. Yes.
So that's in compliance of the NDA.
Sure. And on the second part, CapEx, any upward revision here?
No, I think 1,500 crores of expectations which we have given, I think that looks feasible and that looks appropriate as far as current scenario is concerned.
Okay. And if I can just squeeze in one last question.
Yeah, sure.
So we read in newspapers that the amendment to the Electricity Act that's actually been sent to the standing committee. But theoretically, if the bill were to be accepted in totality, which of course looks less probable even, but hypothetically, what kind of risk as well as opportunities you envisage due to passage of the bill? Thank you.
So I think as far as bill is concerned, yes, I think we look at it as on a positive side, wherein we'll get opportunities to go into new distribution areas. So I think we look at it as a opportunity rather than a risk for us.
All right. Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good morning, sir. Sir, can you give us a breakup of EBITDA?
EBITDA?
Yeah, EBITDA breakup in thermal, renewable, licenses, and SIC.
So EBITDA gas power project for the current quarter is about 238 crores versus
Which project,
129
sir?
crores.
Hello?
Sorry, 238 crores.
So gas-based project, 238 crores.
Okay.
Versus 129 last year. Then renewable project is 260 crores versus 175 crores last year. License distribution about 421 crores versus 322 crores last year. Franchise is 250 crores versus 168 crores last year. And total EBITDA is 1169 versus 764 crores last year.
This is before one-off, right, sir? 1169?
No, this is one after one-off. Before one-off, it is 1151. Because there are very small one-off in the current quarter.
So all the segment-wise EBITDA provided are before one-off, and the total number is after one-off. So the balance you can allocate as one-off and other items.
Okay, got it. And sir, on the wind PLF, you said you are expecting for this 300 megawatt, 40% PLF you are expecting, or 30%. Can you please clarify?
40%.
40%.
40.
40. Okay. And sir, on the gas tie, I'm just harping on it. So we have gas tie for this year at 25%, and from CY23 to CY26 we have 50%. Because last time we said up to CY27. So is there any change in that?
CY26, it is up to 23 to 26, we have 50% tie.
50%. So 25% from domestic and 25% imported, right, sir?
Right.
Right. And sir, just on the capex, so what is the capex incurred in Q1? Can you give us the breakup between distribution licensee and distribution franchisee?
Yeah, we can give the breakup. Distribution license business is about 438 crores.
438 crores, okay.
Yeah, franchise is 55 crores. So about 500 crores capex which we have incurred in the license and franchise put together, which was about 250 crores as compared to the quarter of last year. So we have incurred significant amount of capex in Q1 of FY current year.
And we will be doing 1,500 crore for the full year combined.
Yes, that is what the target is.
Right, sir. That's it from my side. Thank you and all the best.
Thank you. The next question is from the line of Apurv Bahadur from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, wanted your views on the Electricity Amendment Act, given that now instead of delicensing, there will be multiple licensees. So how do you see this opportunity, the size over here? Will it be more like a franchise business?
So it's as we explained by the Rishi, it's an opportunity we see as an opportunity for us because we can go and tap more distribution. So we are seeing as an opportunity rather than any threat to our existing distribution area.
Fair enough, sir. Sir, secondly, also wanted to understand on this billing for Uno Sujin. Understand that the regulator has allowed cost pass-through in the tariff order. So, sir, but will it? So is it like a two-part billing in Uno Sujin, wherein we are billing for the entire fixed cost and only the variable cost for generation, or is it that the overall entire annual amount which was allowed by the regulator is being billed?
So same concept, two-part tariff, all fixed costs will be passed on. Will be to the distribution entity and will be billed to the consumer. It will be recoverable from the consumer.
Okay. Two-part then it's fine, sir.
Yes.
Sir, also recently I think MOP floated a proposal on this high-cost DAM market, which is above the ceiling of 12 rupees. So do we intend to participate in it, given our gas-based power will cost more than 12 rupees?
No, I see. It's basically at what cost you are generating the electricity. Based on that, we will decide whether it's viable to participate in the.
So Apurva, it is basically a trade-off between whether you are making more profits out of sale of gas or you are making more profits out of sale of electricity. So it would be more of a dynamic play on a period-to-period basis, and we have to look at that point in time what makes more sense.
Okay. Okay. Then that sounds correct. Sir, lastly, on I think again on the gas availability front, if you could just enlighten me over here, the gas which we are selling is it the merchant cargo, or are we selling our share of this IOCL and RIL gas? And also, if we are selling the domestic gas, then how are we declaring the availability for Sugen plant?
As far as availability is concerned, it is available. Sugen availability is 100% available. Sugen as well as Sugen, both the plant. In terms of source of gas, we will not able to comment on this at this moment.
Okay, fair enough. Thank you so much.
Thank you. The next question is from the line of Ankit Mittal from SBI Mutual Fund. Please go ahead.
Yes, sir. Just a couple of questions. Firstly, on the two renewable projects that you're undertaking, what is the pending capex for that? The 300 megawatt TPLD and the 115 megawatt SECI project?
115 megawatt SECI project,
115 megawatt SECI project is around 800 crores of capex, and TPLD 300 megawatts is around 1250 to 1300 crores.
How much of that capex is pending?
TPLD, most of the work is pending. 115 megawatts, I think around 30% of the capex is done, and another is in pipeline. But the EPC contract has been awarded, so as and when the EPC contract does the work, we will have to make the payments.
So about 500 crores capex which we have incurred in 115 megawatt project out of 800 crores.
Fair. The other question was, I think in your opening remarks for the distribution business, you mentioned some solar incentives gain of around 21 crores. Could you help me with that? I mean, what is it that's leading to this gain?
See, there is a solar rooftop scheme available in our license distribution area. So under solar rooftop scheme, government has one scheme where if you are facilitating basic solar rooftop more than 10 incremental by if you facilitate the solar rooftop in your license distribution area, then there is an incentive available. And if capacity increase in addition in every particular year is more than 10%, then government is giving incentive to you. So we got some incentive from our license area, by which we have installed more than 10% capacity.
Yes, what's the capacity that we've installed under the scheme?
We'll give the number offline.
Fair. And just one last question. Sequentially, I think we've seen a decent increase in the interest expense for the company. So if you could just highlight on that in terms of the overall debt and the finance costs, what is leading to that increase, and how do you see this come across over the next 1 year?
Overall debt number, average cost is about 7.25% for the current quarter, and debt level is about 11,000 crores.
Okay. Okay. That's it from me. Thank you.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities Limited. Please go ahead.
Thank you. So what is the current regulatory asset pending?
Sorry?
The current outstanding regulatory assets?
It was on year end, it was about 1,900 crores as on March 22. Both disputed as well as undisputed. Undisputed was about 1,300 crores and disputed is about 600 crores.
Ladies and gentlemen, we have lost the line of Mr. Modi. We will move on to the next question, which is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi, sir. Thanks for the opportunity once again. So my question is on the capex you are likely to incur in the Dadra and Nagar Haveli over next 3 to 4 years. Is it something you can you have better idea right now?
So we have stated earlier that we have planned to spend about 1,000 crores capex in the next 5 years in Dadra Nagar Haveli and Daman and Diu area.
Okay. So secondly, on this, sir, given the power price is still running very high, how we are tied up for our power purchase for the next 8 months? Are we sourcing on medium term or exchanges?
It will be, see, we have some bilateral contracts available for our existing license area. So it's a mix of bilateral contract, our own generations, and something from the exchange also.
Understood, sir. Thank you, sir. Thank you.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities Limited. Please go ahead.
So sorry, I dropped out because of network issues. So just a question following up on that. So what was the regulatory asset you were mentioning? It was 1,900 crores, is it?
Yes.
Okay. And anything built up during this quarter, Q1?
So Rahul, as we discussed, there would be some regulatory asset which got built up during the Q1 because of elevated power purchase cost. Over a period of time, so let's say in this year also there are expectations some part of it will get liquidated, but for the full year we expect some additional build up of regulatory assets.
Okay. Okay. Any indicative number just to understand? Or
Difficult to suggest at this point in time. It is difficult when how much volumes and what cost will be able to procure going forward, which will impact the regulatory asset number.
Sure. So what is the current variable cost we are generating at for our gas plants on a blended basis?
Yeah.
One minute, Rahul.
Yeah.
We will give the number offline. We don't have the numbers readily available with us right now.
Sure, sir. Great. Thank you very much.
Thank you. The next question is from the line of Devam Modi from Arteco. Please go ahead.
Yeah, thanks sir for taking my question. So first, this Dadra Nagar Haveli, if you can just walk through what is the exact amount that we have paid to them as of now, and if any further amount needs to be paid as the license fee or something like that, and what will be the sort of, let's say, economics of the transaction as per our understanding in terms of IRRs and all for now?
It's 555 was equity we invested for 49% stake, 51% stake. So that is what we made the investment. And so basically, we look at the perpetual opportunity rather than looking at some IRR kind of a thing. So it's a business available on a perpetual basis. So that is what, and it will, during the course of next couple of years, it will give us many opportunities in the nearby areas also. So we see as a perpetual opportunity rather than looking at one particular IRR kind of a thing.
So it's one-time license fee of 565 crores is what you mentioned.
Yes.
And
51% stake.
Okay, and so basically overall debt that has gone up by, let's say, quarter on quarter, we see that has gone up by almost 2,500 crores. That would majorly be for the renewable acquisition.
Renewable acquisition plus our some built up of regulatory asset also. So it's a mix basically. It's many plus acquisition of Dadra Nagar Haveli also.
What would be the cash balance at our end at the end of June?
June is about cash.
Around 1,500 crores.
So, and if you can, sorry. Yes, please continue.
Go ahead.
Yeah, if you can, I actually missed out on two numbers. If you can just highlight the number of EBITDA for renewables and EBITDA for Dadar and Nagar Haveli.
So we are not sharing EBITDA numbers separately for Dadra and Nagar Haveli. For renewables, EBITDA for Q1
was about 260 crores versus 175 crores last year.
Okay. And for license distribution?
License distribution was 421 crores versus 322 crores last year.
And the major difference one can assume is basically Dadar Nagar Haveli, I mean, in this space. I mean, Steel Mumra was already there last year, right?
No. So as I think Saurabh explained in the opening remarks, there were a lot of other factors in terms of AT&C. I mean, in license distribution, typically there was incentive, there was improvement on account of higher ROE. So all those put together, this delta.
Okay. Sure. Thanks. That's it from my side.
Thank you. The next question is from the line of Dharani Vijay Kumar from Spark Capital. Please go ahead. Mr. Vijay Kumar, I have unmuted your line. Please proceed with your question.
Yeah. So on the gas availability and sales of gas, as I understand, when we have profit opportunity to make by selling LNG, we buy power in the short-term market and supply to our distribution businesses and sell the LNG. Am I right?
Yeah. But it's basically merchant cargo we are selling. So whatever generations available for the beneficiary, Sujan is supplying to our distribution arm.
Okay. And you also mentioned that there is a price point at which it becomes better to sell LNG than generate. So what is that price point in dollars per MMBTU?
It is not fixed price point. It depends on it's a dynamic market. So on a day-to-day basis, we have to decide whether to generate electricity or to sell the gas.
So it also depends on the merchant prices available for electricity
and opportunity available at given point of time. We have to look at.
Okay. And I missed out on the cargo that you had contracted on merchant basis. What is the price at which you have contracted?
$21.
Okay. And obviously, you would be making more than that by selling in the market for LNG.
Yeah.
Okay. My second question is on this Dadra Nagar Haveli. What is the gross block and debt at this asset? Has it been consolidated in this particular quarter, the numbers?
Yes, it is consolidated.
So
okay.
there is no debt, actual debt in the business as of now, and the gross block would be around 250 to 300 crore. Exact number we can give it to you offline.
I didn't get the debt part. Can you repeat that?
There is no debt. There is no debt as of now.
There is no debt. Okay. Okay, that's it from my side. All the best. Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Saurav Mashruwala for closing comments. Ladies and gentlemen, we have lost the line of management. Please stay connected while I reconnect them. Ladies and gentlemen, the line has been connected for the management.
Yeah, thank you for
closing comments from your end.
Yeah, thank you very much for joining Torrent Power's earnings call. We wish everybody has to stay remain safe and healthy. Thank you so much.
Thank you. On behalf of Torrent Power Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.